Hey Sharks, today is Tuesday, March 3rd, and it has been a choppy day. Okay, so I want to touch on my previous video about when the market is when we're having a green day and it's across industries that are not even correlated. Like for example, gold, tech, AI, discretionary spending like Walmart, right? So these industries, they're not even correlated and in different industries and everything is up, right? It's a green day. So when you have those days like that, you can expect profit taking. And that's exactly what happened. I'm not exactly sure what day it was, but we had a day where the entire market was green from crypto to gold and then across all sectors that are not even correlated. And right after that, I will say the next day, that's when the market sold off, right? There was a lot of profit taking. So this time is the reverse of that. And reverse of that, you can see on my screen, I'm just looking at CIFR. Pre-market, you can see it's holding steady. And then right when the market opened, it dipped roughly around 10:30 a.m. Eastern time, and then it recovered. And CIFRs in the crypto mining industry, they are transitioning into AI infrastructure. Okay, but either way, you can see around 10:30 a.m. Eastern, this is where the dip happened, and then investors picked up the slack there and bought the dip. This is just one industry, crypto related AI infrastructure. You can look at Walmart, same thing, roughly around the 7th, the 10:15, 10:30 range. This is where they had a dip, sold off, and then slowly, market picked back up right after that. So this is a pattern that I am noticing that when across all industries there is a dip, a pullback, this is where you can expect the market to recover. And this is when a dip happens across all industries, uncorrelated. So Robinhood is tied to crypto, brokers, and the prediction market, right? So same thing, roughly around the same time. Look at this. This is not a coincidence. This is 10:25 a.m. CIFR was 10:30. Walmart was same thing, 10:15, right around there. So the same, roughly in that 45-minute range, that 45-minute gap, we saw the dip. And then right after that, immediately the market recovered and it started trading sideways. And as Hood, we can look at GLW, same thing right over here. Here's the dip over here, 10:30. This is spot on. 10:30 a.m. The dip happened, and then investors bought the dip, and then recovered, sold off a little bit, but going just sideways action. GLW, this is in the fiber optics connectivity industry. BE, this is the energy sector. Let's look at it. So that dip happened for BE a little bit earlier at 9:45 and even at 10:20 and 10:45. And then investors bought the dip and picked up the slack from there. So this is not a coincidence. And then we look at gold, right? Gold is a good indicator with what's going on right now with the war in Iran. Even gold at exactly 10:20. Look at that. 10:20 a.m. This is where even gold dipped and then picked back up. So gold is a safe haven, especially with war going on. But if it was following pretty much the entire market, the whole market at that same time, 10:20, from 10 a.m. to 10:30 a.m., 10:40 a.m. This is where the dip happened, and then it picked up. Same thing with Bitcoin. This is not a coincidence. Look at this, 9:45, 9:55, 10:15. This is where the dip happened, and then it recovered from there. So this is what I noticed. This is a good indicator that you can expect when all industries are uncorrelated, there is a dip all across industries. That's a good opportunity to build your position, to dollar cost average, to build your position, to open up a lead, right? To deploy some capital. Now, if it's industry specific, so let's just say we are looking at CIFR, right? We can say that if it's related to AI infrastructure and crypto mining and there's a pullback on that entire sector, but Walmart is unaffected, Um, GLW, which is in the fiber optic connectivity, if they're unaffected, then that means that that specific industry is under pressure. Okay, so I think that that's a good indicator to, okay, if that industry is under pressure, then keep your eye on it. But if industries that are uncorrelated across the entire market and they are all experiencing a dip at this approximate the same time, you can say that's a good opportunity to buy in and buy the dip. All right. So this is what I noticed. So it's the reverse of my previous video. My previous video is that when industries that are uncorrelated across an entire market, when it's all a green day, you can expect profit taking. And that's exactly what happened. And then the reverse of that is when industries that are uncorrelated across the entire market, if it's a dip, it's a pullback, you can expect a recovery. So this is what I noticed, and I'm also going to follow this for myself. So this is great to know. But either way, I would like to just share this with you all. By the way, if just want to share with you all my group, so I use WhatsApp, and as you can see here, this is my group, and this is where we share information about the market, anything related to options, and we help each other out in this community here. And of course, like usual, if you want to learn how to trade options, you want to generate some income, I can teach you all the fundamentals, the technicals, and all strategies. And yeah, of course, and if you want some help, definitely be here. You can book a time with me. You'll see the link in the description or the comment section, and I can answer all your questions. And of course, like usual, stay tuned for the second half of this video. You'll see me in action coaching one of my members live. Okay, so other than that, I wish you all a great day. I hope you found this video helpful. Like and subscribe, and I'll see you on the next one.
It's okay. You can see it's still doing well. You can see it's gonna do really well because we have an entire 1 year timeline on this. So
Yeah.
that's gonna be fine. And even with what's going on in the market, it's still holding steady. All right, now the big topic on everybody's mind is iron. Okay, because a lot
Iron.
of
Yep.
us are up a lot of money. Like Ricky's up 34,000. You're up like 10 plus. I'm like 8 and change or something. That's the last time I looked.
Yeah.
So, but we have to be able to take this bag home, right? So, right now, before earnings, you can see it's trading at now. This part right here with iron, we already know the Japanese situation is already priced in, but I think this sell off a little bit is just market manipulation. It's just shaking out weak hands, getting rid of people to exit iron, and then come be able to come in on iron at a better price because institutions have enough capital to move the stock prices by a few bucks or even more. So this is an opportunity to really, you can look at your strike. You can look at your strike and see you have a 64.
Yeah.
So I think you can just keep that and just exit at 64. And then you have a 70, if that's for your leap. That's good. You want the leap strike higher than I mean, you want the poor man's cover call strike higher than your cover call strike. Because
Yeah.
the poor man's cover call strike, if it blows past 70, you are going to be responsible for anything beyond 70, meaning you're going to be out of pocket beyond 70.
Right. Of course.
You get it? Right?
Yeah.
Because you are selling the right for
Right. Right.
70. Right?
But my
So,
covered my leap will cover that, no?
no. What happens is they give you negative shares.
Gotcha.
Yeah. And then, what do you call it? Some brokerages, they kind of break down both legs, but not Schwab. Schwab actually assigns negative shares because you have a high level option assets, right?
Yeah. Yep. Yeah.
Okay, yeah.
But
So
then I'll have that leap to kind of make up the difference.
yeah,
Right? Because it's a 50.
yes, correct. So whatever because when you sell this promise cover call, the buyer wants to get paid for anything beyond that 70. You get what I mean? So
Of course. Yeah.
that's what you owe them if it goes beyond 70.
Yeah.
Sorry, I got an incoming call. Did I lose connection?
No, I'm here.
Okay, yeah. So that's what it is, and then yeah. So what? So everything looks good. And the only thing I would say is, question for you is, are you happy with the 64 cover call strike? Because right now is an opportunity to move that 64 a little bit higher if you like. You might even be able to keep the same expiration date, and go to like 65 or 66 or even 70. Because
Uh,
if during earnings, yeah,
yeah, if it blows up during it, hey, get out of here.
yeah,
My brother's squirrel. I'm at my brother's house and he has a squirrel. Get out of here.
he has a pet squirrel.
Yeah, it's a tree that fell and there was a nest and there was this baby squirrel by itself. And it had just been born and it wasn't gonna the mom wasn't gonna come back because the tree was
Yeah,
gone. So he
yeah,
took her and raised her.
and it's domesticated in the home.
Yeah.
Wow, that's pretty cool. I didn't know snow that can happen for
Yeah. Well, it grew up in
squirrels.
here and he can't release her now because she doesn't know how to survive in the wild.
Jeez. Okay.
She'll get picked up quick.
Yeah, for sure. I mean, anything out there would see that as free dinner.
Easy pickings, yeah.
Exactly. Uh, uh, yeah. So as far as the 64 strike, you can consider moving that up
Yeah, I
at this
wonder like
time, or just leave it alone.
earlier, or like 2 days ago, I think it was something like that. This was
Yeah,
up
it was close. It was at
a lot
61.
more. Yeah.
Yeah. So that's why when stock pulls back, so what happened is you realize, oh wow, it was close to my strike, and then being close to your strike, if you try to roll it out, then it's gonna be more expensive. The fact that now has a spike, a bit of a pullback, it's gonna be cheaper to close out the 64 and then move it up to a higher strike for break even, or
Yeah.
even some profit there. So
So move it February 27th. So if I move it, it would be, and then it goes down after earnings, then then I would earn that. But if it goes
I
up,
just don't see. I mean, I could be wrong, but I have. I'm like, I'll
should
tell
I
you how
close
confident.
up?
I'm like 90% confident that Ironson is going to do really well in earnings.
Yeah, I wonder, should I, like this 70, the three that I have,
Yeah.
the poor man's covered calls, should I close that out now?
And that's 320. Cost basis 16. No, it's too early. You're only up a little bit, but it's too early. Yeah. That's 320. No, you're okay there. 70 is a good point.
Okay.
Yeah.
Yeah, and that's still, yeah, 320, March 20th.
Yeah.
Because like you said, if it blows past that, then I'm gonna be
No, I think 70 is a good, because if even if it blows past it, there's going to
yeah,
be profit taking. 1000%. If iron does really well, people are going to take profit. There's going to be day traders,
right,
there's going to swing traders are going to just take their profits and get out. So it's going to run up and then it's going to get break down. I mean, if you close it out now and it does run beyond 70 and you don't have a promise cover call on it, then you can sell the close earlier and take more profits beyond at 70 or higher if it does go beyond there.
what do you mean? If I close out, you mean the leap?
No, the poor man's cover call.
If I
If
close
because
it
right now,
now,
if you close it right now, you have a profit of
two,
269.
right,
Right. So you buy the close, you close that, you leave your leap uncovered, and
right,
then during earnings, that huge when it does if it does have that huge spike up, you sell to close the leap.
right.
Right. At the highest point where you think, just keep in mind that the previous resistance for iron is, I believe, 72.
Yeah, it was where was iron?
About maybe 5 months ago, or 4 months ago, or 76.
Yeah, that was the big
Yeah,
that was
but I wouldn't wait till 76. I would
no,
just get
no,
out at
no.
72.
Yeah. 72 is yeah, because before that it was 72.
Yeah.
This other time over here was 72.
Yeah.
Yeah. Yeah, and I noticed with iron, like every time it'll ride up on the Bollinger Bands and it pulls back, then it goes up, then it pulls back.
Yeah.
It touches that top one, it starts to pull back.
Just like anything, when there's a fast run up, people tend to just take the profits and exit.
Yeah.
Yeah, they don't hold it unless you're super long term on it. Then yeah, you just leave it alone. But I think it's better to just exit, get the capital back, and put it to work.
Yeah.
I would once you get your capital back, we're gonna work on the nuclear stocks, uraniums.
Okay. Yeah, like the other day, like this number here, it says 99 now. 2 days ago it was 105.
Yeah,
And I was
well, 2 days
tempted to
ago.
just I was tempted to just close everything out and then I would have that 105 to start over again.
No, but you have earnings coming up. You're gonna miss
Yeah,
out on all the you have positions that are pos- the positions you currently have are the expectations are good earnings.
yeah,
Hood
right,
is
right.
expecting good earnings. Hood is gonna be the if Vlad on that earnings call says we are selected as the official brokerage for the Trump accounts,
Yeah.
I guarantee you that stock's gonna go. Like
Yeah, it's
there's
gonna
no doubt about
shoot
that.
up. Yeah, it's
Yeah.
gonna
And
shoot
right
up.
now it's having this pullback, just straight manipulation and just getting people out so that they could come back in at a certain price.
Right.
Like this is just from my experience. Like there's no reason why Hood is having a pullback right now, besides the Japanese yen situation 2 days ago.
Yeah.
But now it's at this stage, it's still even with the news out there, it's still having uh, hesitation, right? It's just
Right.
it's not enough movement. But I think as we get closer to the earnings and during the earnings, you'll see.
Yeah. So I pretty much should just leave everything the way it is now, I think. For now. What do you think? Just leave it, right?
Yeah, yeah.
Except you said maybe get this a
Maybe
little.
consider this. Look at the numbers on that. You can just go to roll this.
Yeah. Let me uh this one here, right? Leg two. Custom leg two strategy. That's weird. Why is it not?
Yeah, custom
Yeah,
legs
yeah,
to sell to
right, right.
open. So if we keep the same day,
Debit.
70, you're gonna get paid. Oh, it's $1,000. Wow.
It's
If
a
you roll
debit.
from 64 to 70 to next month, it's a debit.
Same yeah.
Jeez, that's not good. I think that's very bullish signs. Like the market already placing in that you're rolling out from 60. Well, that's a pretty. You're going up 6 points either way, but still,
Yeah.
what's the difference? It's still 300 difference.
Yeah.
Yeah, and it's
I've probably just leave it then.
yeah. We can just leave it.
Yeah, I'll leave it.
Okay.
Yeah, and then we'll see because earnings is not next week, right?
Yeah, earnings. It's earnings season. Q1 for a
Let's
lot of
see.
stocks. Yeah. So
Yeah, it's iron is earnings are the 5th, February 5th. Yeah.
hmm
Cool. All right, good.
okay.
Hood is
Oh yeah.
Hood
Hood
is
is the fifth.
February
Hood is the
Hood is
fifth. Iron is the 10th.
no, the other way around. Hood is the 10th, iron is the 5th.
Oh, okay.
Yeah.
Got it. Yeah.
All
So
right, cool.
these earnings are gonna impact your portfolio.
Yep. All right.
There's more upside than downside. Judging at the landscape of the market and everything else, if I weigh the scale, you have a lot more pros than cons in this. Only thing is if the Japanese yen situation gets worse, then yeah, they can affect the investors. But
Yeah.
overall, I think over earnings is gonna override that. But we gotta exit though. We gotta take profits, get that capital back, and I was saying we're gonna look into nuclear. Uh,
Yep.
Nuclear, you're gonna see when you look at the technicals on it. When I show you the technicals, you're gonna like it, and you can build a really big position around it and benefit from the future. Ah, I like that. Benefit from the future. That's
Yeah.
exactly what investing is all about.
Yeah.
Mhm.
All right, good.
Okay.
All right, man. Sounds good.
All right. Let me get back in. Okay, George. Fantastic. Then I wish you